Taking the turn from Venezuelan oil to gold, the South American nation, roiled in political turmoil, has defaulted on a gold swap agreement valued at $75 million with Deutsche Bank. The default has put the lender in the position to take control of the 20 tons of gold used as collateral for a loan and close out the contract. This is not the first issue the Venezuelan government has had on making good on financial agreements. Their central bank missed a March deadline to buy back gold from Citigroup for nearly $1.1 billion. Prior to that, the Bank of England refused to return $1.2 billion worth of Venezuelan gold. For more on this and other gold-related news, we are joined by Euro-Pacific Capital CEO Peter Schiff. Peter, welcome back to the show. What do you make of this messy situation with Venezuela's gold reserves and this default with Deutsche Bank?
Well, you know, Venezuela's in a lot of trouble. They unfortunately adopted democratic socialism, and now they are paying the price, and now they're, losing their gold, which is something that Venezuela is going to badly need. If they want to try to reestablish some type of viable currency, they're going to need gold reserves to do it, and it appears that they're going to lose, that portion of their reserves. The key is that they actually have the gold that they pledged. I mean, and is the Deutsche Bank going to get the loan as collateral, or is there not quite enough gold there to satisfy the loan?
Mm-hmm. And also, Serbia and the Philippines are among the other countries apparently taking steps to bolster their gold reserves. Serbia is working to increase their gold reserves from 20 to 30 tons by the end of this year, with the goal of holding 50 tons of bullion by the end of 2020. And last week, the Central Bank of the Philippines announced a new law that exempted gold sales by small-scale miners to the bank from excise duties and income taxes. Are these moves due to a concern over the strength of the dollar and a resort to gold reserves?
Well, not the strength of the dollar, but it's the potential future weakness of the dollar. That's why I think you're going to have a global gold rush on the part of central banks to build up their gold reserves, preparing for a dollar crisis. You know, for years and years, the Federal Reserve was pretending that they could normalize interest rates and unwind the balance sheet. But that was all a pretense. They could not do that. I'd known that from the beginning. But the world's about to figure it out because the Fed's going to go back to zero. They're going to do more quantitative easing. And so the balance sheet's going to blow up to new highs. We're going back to zero. And people are going to figure out around the world that the Fed is stuck, that rates are going to remain low regardless of how high inflation goes in the United States. And inflation is about to go through the roof. And that means the dollar is going to go through the floor. And that means the world needs an alternative to the U.S. dollar, and the best alternative is what the dollar supplanted, and that's gold. I mean, gold was the reserve until the dollar came along, and the dollar only became the reserve because it was backed by gold and redeemable in gold. Well, we defaulted on those obligations in 1971, but the dollar as a fiat currency is continued to serve as the reserve. Well, the days that the dollar is the reserve currency are numbered, and the smart central banks are trying to buy as much gold as they can before the number is up.
Now, during the Future of Asia conference in Tokyo last week, Malaysian Prime Minister Mahathir Mohamad suggested that East Asian nations should adopt a common currency backed by gold, saying that at the moment we have to depend upon the U.S. dollar, but the U.S. dollar is also not stable. So the currency that we propose should be based on gold because gold is much more stable. The comment came shortly after the Trump administration named Malaysia as one of the 9 countries that need close scrutiny as possible currency manipulators. What are your thoughts on Malaysia as a currency manipulator, and does a common currency backed by gold solve that problem?
Well, all currencies should be backed by gold. And again, at one time they were. That's what gives currency value, is the gold that backs it up. So I think that is the right move. I think ultimately more central banks around the world are going to be looking to tie their currencies to real money, to gold, and that is going to undermine the dollar. Everybody that wants to accuse foreign central banks of manipulating their currencies, in a way they have been doing that. They've been manipulating their currencies down to prop up the dollar over the years. That's generally been what's happened because exporters wanted to preserve the U.S. market as as a market for their exports. But I think people are going to see the folly of that. And I think, soon you're going to see the dollar sinking, and all these currencies of these export nations are going to be rising. And what that's going to do is that's going to unleash tremendous purchasing power outside the United States. And a lot of countries in Southeast Asia that have been exporting products to the United States are going to consume the products that they produce themselves rather than send them to the United States.
Fascinating. Euro Pacific Capital CEO Peter Schiff, thanks for your time.